I'd like to welcome everyone that hopped on the call today. So what I'm going to be basically going over today is some of the trades that I took today, and I'm going to be going over some of the trades that I will be looking at for the rest of the week. So obviously tomorrow it's Wednesday, then Thursday, Friday are 3 best days of the week. Okay. So GU, as I've said, if you take a look at the daily time frame, GU did something very, very predictable. Came here, hit off this high. We've called this out. Like, if you guys have been following me on YouTube for quite a while, you kind of can see the pattern, right? You can kind of see that what we've been doing lately on such pairs, such as GU, your JPY, and you can see what we've been doing on the higher time frames and calling out these moves. Okay, overall, very extremely high accuracy on the higher time frames. Okay, on the lower time frame, I've already been through GU, so I'm not really going to go over it. Another setup that I took today was your JPY buy. So I was looking for a buy right here at this 4-hour IC, and price could push up. It's not, it's like in like 5 pips drawdown, but I specifically still think that it'll push up. It was perfect. It cleared liquidity. It's in a upward trend. There was consolidation right here. There was manipulation, and then I'm looking for the trend up. It was a fairly educated setup. Okay, so I did put in a good bit of analysis into this to come to the conclusion that I want to buy. So it wasn't any just throw away setup. So yeah, I'm still going to be holding. Euro odd is a very nice setup that I see personally on the 2-hour IC right there. Boom. So you can be selling, or even the 4-hour. Nice, still the same entry. Okay, I personally think it's very, very nice. 4-hour on Euro odd failed to break above this high. Okay, price kind of did it. Okay, inside the big trend, there is a mini trend, and while this mini trend was forming, it formed our trend line. Our trend line building up liquidity, and our liquidity got smacked. So once we get that liquidity smack, we get that retest on the trend line as well. It lines up with our IC, and we have mini imbalance in here between the weeks. I pointed out. Boom, nicely. I think Tradingview came out with a new update this week, and it's unbelievable. I love it. So it really, really helps us as educators, for us teaching people how to trade. So useful, this tool. So literally, it helps us draw paths. Literally helps us draw like this. Boom. Without us having to go onto, without us having to go onto the arrow here, drawing it out one by one, clicking, drawing it out one by one. Such a pain. So I love this, really, really love this tool. Just wanted to point it out to anyone if they wanted to, I think it's really, really useful for you, even if you're doing it for your own analysis or your own back testing, to kind of mark it out in the line. Another thing that I want you guys to kind of pay attention to, and I never really say this, but once in a while, take a look at your line charts. Don't just focus on your candlestick charts, because they kind of get very, very noisy, as you can see right here. So price is very, very noisy, especially the past few months. Price has just been noisier as ever due to the constant and regular manipulation. So take a look at your line chart, okay? And the best thing about your line chart is you can really, really see where your potential ICs can be in a much, much better manner. So for example, and your liquidity, by the way. So let's just take a look right here. So as a normal, let's just say as a trader, okay, trading candlesticks and understanding formations, I can already kind of see what's going on here. So for example, if you take a look here, I see a sharp spike up telling me that there was fairly strong price action pushing up. I had this sort of consolidation. I had this expansion down, then I had a trend up, expansion up. So there was whipsaw action right here. So I'm guessing that there's some sort of institutional calendar here. There's some sort of pullback. So this could have been a test. It could have not been. I'm on a nice chart. Sorry, guys. Ooh. Okay, so I'm on a line chart, so I don't know yet. But something else that I know is that I got liquidity cleared on this high. I got liquidity cleared on this high. We also have another high right here. So this could have mitigated from this high right here. This high ended up clearing this liquidity, this liquidity, this liquidity, and this liquidity. Okay, so you can study line charts so easily. And then what you can do is you can take a rectangle, mark out your highs right here, or these sudden spikes on the line chart, and just drop down back to the candlestick chart. Sorry guys, I don't know what's stuck in my throat. Okay, so see, we were very, very right. On the 4-hour time frame, we had exactly that. So we had the consolidation, and we had the push up that took out this wicks, and then price made a bearish engulfing candle. Once you get a bearish engulfing candle, that's a good sign that this that the institutions really were in play here. So then we got a continuation candle. This usually always happens after the bearish engulfing candle or bullish engulfing candle. The candle after usually is a candle that goes up and fills in imbalances. So if you look at the 1-hour time frame, you can kind of understand what's happening here. See, so after this big drop, okay, you kind of get that these two bullish candles that go up all the way, fill up the imbalances to the T, and then boom, it reacts. And in this same scenario, you see you had a 1-hour candle here, price came up, 1-hour candle, missed it by like a pip or two, but dropped. So you kind of get the idea. So you can see what we had right here on the line chart helped us a lot figure out. See, with all this noise, if I was looking at a chart like this, it would just be so noisy for me to try and look for my institutional candles. But with a line chart, boom, the institutional candles are only the ones that really like stand out to you. So this right here stands out to me. It's this large hard spike. Okay, spike. What you want to be looking for is these sharp spikes at the bottom. See, spiky ends. These are where the best ICs are lying. You do not want to be looking at areas such as this. Okay, it's not spiky. Okay, it kind of has a double top right here. It has to be such as this area. You see, you have the equal highs. So that means you have money up on this level. And then you get the sudden sharp spike and then spike down. And then see that retest there, you know that candle has already been mitigated. Once again, would I be looking, for example, at this area right here, this area right here for an institutional candle? No, it wasn't really a sharp spike such as these. So I know that there would be no institutional candle line in here, or a high probable one. Okay, because you can see that the spike obviously wasn't sharp enough, and you can see that there's kind of a flat blunt top. Once you see a flat blunt top, change to our normal candles. Oh, I like the hollow candles. But anyways, let's change to our normal candles. Okay, let's see. See? Not a perfect institutional candle here, too many wicks. Not a perfect one, too many wicks. You would have got stopped out in this scenario. This is a good one. It's a good one. It's a good one. See, these are perfect ones. This isn't the best one, to be honest. Actually, it is. It's a good example because look. What am I doing? Okay. So right here, last time candle for the up move. What do you get? You get this double bottom right here. You have this money sitting down here. You got to push down, took that liquidity, push up, bullish engulfing candle. After that bullish engulfing candle, what you get? That pull back into this candle to play in, and then obviously some 15-minute time frame candle down at the bottom right here. Could have gotten the open on that. Even if you got the open of the 4-hour time frame candle, still would have been safe because your SL would have been here. So that would have been a narrow, close call, but you still would have won nicely on that trade. Okay, so you would have caught a nice 200 pips. Where would you have targeted? I personally would have targeted this high right here. So I don't try anymore. I don't sell into a support area and I don't buy into a resistance area. Okay, so obviously after this high right here, it's just the next resistance. So I would have targeted this, and my TP would have been a tiny bit below it in case it wants to react. Even this IC right here, see, you have an IC right here, so I would have placed it right here, and you can see that price actually reacted right off this IC. Boom. So just be a bit more careful with your ICs and really analyze them, okay? Especially these days in the market, you really have to pick the perfect IC, because if it's not a perfect IC and it's mediocre, stuff's going to be wonky, okay? USD JPY is a really, really nice setup that I'm going to be looking to short USD JPY. Okay, overall still fairly bearish. Price didn't break up above this structure right here, so my analysis was obviously incorrect up here. So obviously I switched my structure to sells because it broke down to the bottom. So I'll be looking to sell from this line. Okay, CJ reversal coming. Yeah, I'll discuss that CJ in a second because I actually have something to show you on that. Obviously we have some liquidity sitting here. And USD JPY has an absolutely beautiful buy scenario from this area. So always look at your daily and weekly times because there's a lot of candles that you might not notice. There's this example which I keep going back to over and over again. I don't know anyone that's taken this, including me, because I'm guilty of it too. I don't really watch the monthly time frame as much. But you would have missed out on this epic setup. Boom. Monthly IC. You literally, the minute it touched it, there was no ever coming back. Once that institutional candle got triggered, there was literally no coming back up to that area ever again. Funny thing is, it literally dropped down in the first day of it triggering, just to show you how strong the higher time frames are. In the first day of it triggering, you would have copped a nice 200 pips in the first day. After that, it was a game of add-in re-entries. How do you add re-entries? You wait for every pullback, or you go onto the line chart, right? And for every pullback, you mark out your line. So for every pullback, I take a line. Boom. Okay. Every pullback, I'm actually going to use my brush tool instead. So, boom. This could be another potential entry. So I look at the tips that have sharp pushes up, such as this as well. Okay. Sharp pushes up. And then I switch down to my candles and I see, do I have a good enough entry or not? Can drop into the 1 hour, 2 hour time frame. Okay. Boom. No, I've already been through this. It's way, way back. Okay. Easy stuff. So the first candle that I marked out, what do we have? Lots and lots of highs. So a lot of liquidity sitting up above here. Boom. Got smacked by this heavy, big bullish candle. Price drops drastically down after. What does it do? Come down here, clear this liquidity below. And then price pushes back up. Push back up to touch the open of that last up candle for the down move. Just like so. And away price goes. And the best thing about this is it's lying on a resistance level as well. So usually once your resistance level gets broken, your last up candle for the down move lies on the same line as that resistance level. So if you drag the box across like this, right? See, it lies in that resistance level. So that's a fairly famous setup. I know a lot of people take this. They usually look at the resistance zone. They don't take it from the resistance. They wait for that resistance to be broken. They wait for that drop down, the confirmation once it breaks that low that it wants to go lower, and they wait for that resistance to touch again. So even if they didn't know about institutional candles, they'd still enter off that resistance zone. And then, boom, they'd look lower. Or the people that trade head and shoulders, this would have been another scenario for them. So they have the head, the shoulder, head, shoulder, just like so. Okay. CAD JPY, perfect example on CAD JPY as well on the daily time frame. So obviously CAD JPY moves very, very slow, but you guys have seen this. We called this before, last up candle for the down move. Showed this to you guys a while back, and you would have currently been up around 100 pips. Okay. So obviously it's been going slow. All you have to do is enter the last up candle for the down move on this, okay, this 2 hour, and this was the daily. I don't see where exactly you're looking for your reversal. Is it down here? Potential setup. Boom. Keep your eyes up. If a highly probable trade scenario could be consolidation and then expand down and then push up. End up taking the money up here. US oil obviously pushing up to the area which I called out. So once it pushes up to this area, we look for shorts down to 32. So this could be ended this week, start next week. Possible buy setup would be down here, 2 hour time frame on gold, or the 4 hour time frame. No, 2 hour time frame. Or let's see the 3 hour. A lot of people neglect the 3 hour as well, which is really, really nice usually. See, that's nice in 3 hour. So could it be possible? But watch out because there's fairly strong trend line on the 4 hour time for the 4 hour and the 3 hour and the 2 hour and 1 hour. That's about it. I don't really see any other setups. I mean, I'll try update you guys as much as I can in the premium group. As you guys can see, I've kind of been putting more and more effort into sending out the analysis and all my thought processes behind it, etc. So it can help you guys understand why I took a trade and to aid you in your learning purpose and to give you more confidence in that signal. Okay, but that's pretty much it. The most important thing that I want you guys to take out of this call is not the setups, nothing like that. I want you to really, really focus on what I said about the line chart. Really, really, really important. Okay. So that being said, I appreciate him for hopping on this call, and I hope to see you guys on the next one. Have a good day or night.